If you're about to exit drop, you're probably wondering, how do I find the right financial advisor for me? And how do they get paid? Well, we're going to go over that in this video. Okay, so if you're about to exit drop, most of you know that, that drop money needs to go somewhere and you're going from working to retiring. So a lot of people want to look for a financial advisor to help either manage the money or investments or whatever else. So in this video, I kind of want to give you some tips and some tricks on how to find the best financial advisor for your situation. As most of you know, I'm a financial advisor at a financial company. This video is not to sell you on us because not everyone's a good fit for us, right? We don't even work with everybody. But I want to show you and kind of tell you how to navigate through all the different things that are out there. Because there's, like anything, there's good financial advisors, there's bad ones, there's cheap ones, there's expensive ones. And it really all depends on your situation with who is best for you. So let's get into that in this video. Okay, so let's start off number one, going over how financial advisors get paid. That's usually the biggest question, or usually one of the biggest concerns when somebody talks to me. They say, well, how much is this going to cost me? Your services sound great. I love your videos, whatever else. How much does it cost me? Well, financial advisors can get paid one of three ways, okay? So the first way is kind of the traditional way that they've done forever, and it's making commissions. So basically they put you into a product and then they make a commission off of whatever product that is. Now, that can be good and that can be bad. So one thing, if you go into like a fixed account, so let's say a fixed CD or an annuity or something like that, and they pay the advisor a commission, well, that's already factored into the interest rate. So if the interest rate that you're getting, if you're comfortable with that or it's competitive, then let the company, pay for the financial advisor that way, because that way you don't have to. You don't have to have a fee on top of your fixed interest rate. And typically, if you're going with fixed accounts, they're for the most part going to be no fees. There are some exceptions. There are some people that still charge a fee on top of the fixed accounts, but there's also some people who or some accounts that have what's called income riders or things like that. But a good rule of thumb is if you're going with fixed, safe, secure accounts, there probably shouldn't be any fees, but I would just make sure you still ask to know. Now, commissions on market-based accounts are a little different. You have to be careful about that, because really, if you're going into the market and you have somebody managing your money that's market-based, you probably want them more invested in the process and not just transactional, trying to get commissions by selling market-based accounts. And that's what leads into our second way that financial advisors get paid, and that's by charging an asset management fee, meaning that maybe it's 1% is pretty typical for the industry, where they charge 1% and they will manage the investments. So whether that's stocks, bonds, whatever else, like I said, some people do that on fixed accounts, but that 1% fee is what they'll charge. And so that way, the nice thing about that is they're just charging a flat fee. So that's where fiduciaries come in, and they don't really care what you go into because they're charging a 1% flat fee anyways. So they're really giving unbiased advice, or they should be giving unbiased advice when they're doing that. And so if you're looking for more of a market-based, manage your money type of account, you might want to look at that if you want a fiduciary advisor. But that's going to be a little bit more expensive than not at all. Than if you just went with the just Vanguard account on your own and did it yourself. Obviously, you're hiring someone to manage it. It's going to cost a fee there. One thing about fees on mutual funds and market-based accounts, especially if you have mutual funds, ETFs, which a majority of you do, there's always going to be fees on those. So a lot of times people will come and say, well, I don't have any fees on my Vanguard account, or I don't have any fees on my Fidelity account. Yes, you do. There are fees inside of it. They're called expense ratios. You can look those up based on what your investments are. Now, some are lower than others based on the level of management, but you still have some fees there, so make sure you're conscious of that. Okay, so the third way is what's called a planning fee, where somebody actually, will set up a plan. That you go to them, you say, okay, well, what do you want? This is what I want. And then they'll put together a full plan for you. and then they'll charge you a fee to do that. So anywhere from, we've seen $500 to $15,000 to set up a plan for your retirement. And then you can either go do it yourself, or you can have them implement it, or you can go take it to another financial advisor. So those are usually the three ways of doing it. Now, we personally, the way I've set up our company is we do free consultations up front just to get to know you, see if it's a good fit for you and us. And then we do a introductory call, a planning meeting. And then on the third meeting, we say, okay, well, here, based on what you want, here's the plan that we think that we should go with based on your needs and your goals and what you're looking for. And here are the fees, whatever they might be. But you really want to look for someone that isn't charging a ton, but is upfront with whatever their fees might be before you go into it. Now, if you're meeting with somebody and they're not talking about how they're getting paid at all, that might be a red flag, because obviously they're getting paid. So I would just ask, say, how do you make money by working with us? Is it a commission? Are you charging an asset fee? Are you going to charge me a big, planning fee? And then from there, you can figure out which option you want to go with. But yeah, those are the three ways that financial advisors can get paid. Okay, so moving on. So how about the types of financial advisors? Now, there's two different things that you kind of want to look at, okay? So number one is how financial advisors are employed. And number two is how financial advisors are licensed. Okay, so let's start off with the employed. There are two different types of financial advisors. Number one is an independent financial advisor. What an independent financial advisor does is they represent their clients, not a company. So they can usually work with multiple different companies, in our case, thousands of companies, and we basically can work with whatever we think is best for our clients. Not everyone, but a lot of companies. And then the opposite side is what's called a captive financial advisor. Now, a captive financial advisor typically works for one specific company. So I don't want to mention any names, but a lot of the deferred comps and 403Bs and 457s that are with state employees, or even, the investment plan itself, a lot of those advisors are employees of the companies that they work for, meaning they have to tell you about their accounts, their products, what they're approved to talk about. And if they're only licensed, or if they're only with one company and they're getting a paycheck from that company to offer you their products, that might not always be in your best interest, okay? Now, sometimes it might be, but a lot of times, if we meet with somebody and put together a plan, 9 out of 10 times we're using different accounts, because everyone's different, right? So if you work with somebody and they can only use one specific company, or maybe two or three, and it's kind of controlled by who's giving them a paycheck, instead of who their clients are, that could be an issue, okay? So just something to think about: independent versus captive. Are they employed with the company? And one way you might know is, if they're talking about a specific account, and that company that the account's with is also on their business card, it might be a giveaway that they're captive with that company. But you can ask them whether or not they're independent financial advisors or not, or you really want to go with this one company, this one product, this one account, then having a captive advisor wouldn't hurt if you already know that's the way you want to go. So then the other side of it is how somebody is licensed, okay? So unfortunately, financial advisor is not a regulated word. So you have people who are insurance agents that are financial advisors. You have people who are fully licensed registered investment advisors that are financial advisors. You have people who are mortgage brokers that call themselves financial advisors. It's not really regulated. So what you want to look at is how the person you're working with is licensed. Now, there is a website, and I'm going to link it down below, but it's finra.brokercheck.org. Now, this is run by FINRA, who basically, and the SEC, they link together, right? But they're run by these companies that basically do all the licensing for financial advisors throughout the country. Now, you're typically going to run into three different types of financial advisors. Number one will be just your purely insurance agent licensed only. So what you can do is you can go to this website, type in someone's name. If they're not on the website at all, and you can't find their name, then they might just be insurance only, which means that all they can do is offer fixed annuities, life insurance, basically things with insurance companies. Now, fixed annuities and life insurance can be fantastic, but if that's all they're licensed to do, they cannot offer or even really talk about all the other options that are out there. Now, the other type of licensing is what's called securities license. Now, there's two different things of the securities license. Number one is to be able to charge commissions or be able to use what's called open-end funds, and that is your Series 6 and Series 7. Okay, those are the types of licenses. That means you're a broker if you have your Series 6 or Series 7. Then you have what's called a fiduciary advisor or a registered investment advisor or an investment advisor representative, and they will have a license of either a Series 65 and Series 66. So I know this is probably all a little confusing. Here's the easy way to go about it. So if you go to that finra.brokercheck.org and you type in your financial advisor's name, it will pull up their information. Now, if they're not, once again, if they're not, if they haven't passed any of the series, that's the test that you have to take to become securities licensed. If they haven't passed any of those, they won't be on there. But if they have a Series 6 and Series 7, it'll say that they have those licenses. That means that they're brokers. Series 65 and Series 66 will mean that they are fiduciaries. And sometimes people will have both. And so we're licensed to do all of it. So we have all three: insurance, Series 6 and 7, and Series 65 and 66. So that's something you want to research. On that website, you can also see how long they've been in business. You can also see how long, or if they have any kind of complaints against them. You can also see if there's any kind of judgments or liens or lawsuits or criminal records in the past for your advisor as well. It is a really good resource to be able to sit down and just research your financial advisor to see whether or not it's a good fit for you. And it's a protection, right? Because it's what financial advisors do. They're dealing with your life savings. You want to make sure that you're doing your research. You want to make sure that you look for someone. Now, so once again, there's two parts of it. How someone is employed, captive or independent, and how someone's licensed. Now, you can have somebody that is captive and a fiduciary, right? So you can have somebody who is captive, meaning that they work for a company and they're a fiduciary, which means that they legally have to do what's in your best interest, but they only have to do what's in your best interest of what's available for them to offer within that one company, right? So a lot of, so just look at it and see. We personally chosen to be independent and also be able to act as fiduciaries, as investment advisors, because we think that's the best thing for our clients. But we can also act as brokers or whatever else if needed as well. Okay, so the very last thing I want to talk about is somebody who is familiar with your situation. Now, as many of you know, we work very extensively for a long period of time working with people in drop in the FRS, in the Florida retirement system. It's kind of our niche, our specialty, similar to how a doctor might only do a certain surgery on someone's foot, right? That's kind of what we do. We work with people outside of it, but that is our primary focus, is working with the Florida retirement system, just because we know it. So you want to make sure, and there's lots of people who work with the Florida retirement system, but you want to make sure that you work with somebody who knows your situation, who knows the timelines for getting paperwork in would drop. What paperworks need to be filed, when they need to file the paperwork, when things will be rolled over, when you'll have access to your money, when you'll get your pension check, your COLA, and how all of that works, how it's taxable. Those are important things because that, for most of you, now you might say, yeah, my drop amount is however much it is, $200,000. That's the biggest part of my retirement. Well, yeah, it might be one of the biggest parts of your lump sum, but the biggest part of your retirement is probably that monthly pension, right? Or the health insurance subsidy that you get, or the COLA that you get. Those all go in, and into your retirement plan. If somebody doesn't know about it, they really don't know about a large portion of your retirement plan. So those are some things to take a look at. And real quick, I know I talked about a lot here. So feel free to rewind, look at the notes wherever you're watching this, whether it's YouTube, Facebook, wherever it might be. So look at the notes. We'll have some links and things there. But real quick, let's do a recap because a lot of you, this is very important, and a lot of you are wondering about this. So going back to how financial advisors get paid, they get paid one of three ways. Number one is by making a commission. Number two is by charging an asset fee that comes off of the account, whether it's every year or every quarter. And number three is by charging a planning fee. Those are the three ways that financial advisors get paid. Then we go into how they're licensed. They can be insurance only, or they can have their securities license plus insurance only. So they can have their securities license, which is Series 6, Series 7, Series 65, 66. And then the very last thing is whether or not they actually know about your situation. And so those are the kind of the things you want to take a look at. Now, if you want to meet with us, I will tell you right now, we don't work with everyone. That's more about just, we want to work with people who we feel like we can help. But if you'd like to have a conversation with us and explore that option, there's a link to our calendar down below. That's a free 15-minute consultation, or complimentary 15-minute consultation where we can sit down and just discuss it, see if we can answer anything for you, see if it makes sense to even talk about working together and go from there. Or if you're between some other advisors, or maybe you're already set and you just want to research the financial advisors that you think you're going to go with. I hope this video helped. Thank you all so much. And if you have any other questions, feel free to leave a comment or shoot us an email or sign up for that consultation. We're always here. Thank you so much. Hope you all have a great day.